So, I heard you got problems making profitable trades. I heard you entered the trade the other day and it went straight to your stop loss. Continue watching the rest of this video. I'm going to show you guys some tools and tactics that you can actually use to take your trade to the next level. Okay, so I'm going to be going through GBPJPY, full on analysis, full recap, full explanation of exactly exactly why I ended up entering this trade. I ended up entering yesterday on a Friday, and literally within the span of a few hours, our trade absolutely smashed the take profit zone. So without further ado, let's go ahead and get into the analysis. Let's go ahead and cue the intro. Alright guys, so we got GJ pulled up on the charts right now. Let's go ahead and get into this full analysis. First thing I noticed, okay, looking at GJ, in the past we had this level of structure. It was two levels of structure, very small but very respected levels of structure, and both of these structures were broken out extremely strong. Okay, these structures are completely blown through. We had the pullback, and then we had continuation, another pullback, and then continuation. Okay, and we can see a very strong trend down of the markets. And then at the bottom here, we see this tweezer bottom. Now, what the tweezer bottom shows me is that this level had very strong, crucial rejection to the upside. So once we had this level to the upside, we had another pullback, and price pulls back a couple times, and then we get a push up to our 50 moving average. Okay, basically what the 50 moving average is this is going to be your value zone when price is actually trending strongly. So you see how we had very strong rejection here, and we had strong movement up, small pullback, strong movement up. Being that price was overall trending, the 50 moving average, what it likes to do is it likes to act as a value zone. And pretty much what I mean when I say value zone is it's going to be like a moving trend line. So it's going to be mobile, it's going to move around your price, and it'll act as a value zone in certain circumstances. And real quick, I want to look in the past here and just show you guys. If you look right here, when price was trending up strong, we noticed that it rejected very strongly off the 50 moving average. We got more levels and then more levels. So it's a value zone. So even though sometimes it may not, shoot directly off the zone, it still tends to reject off when you have that strong trend. Okay, let me just look for one more example of this. Right here, we got a breakout. Price starts moving strongly. We got a small pullback to the moving average, another pullback kind of near the moving average, and then we get a push down to market structure. More right here, more right here. So you can see this is a very good tool to utilize when it comes to finding your entries. So that was my first bias on why I actually looked to, wanted to sell this pair. Now, not only was it on our 50 moving average, if we look right here, you can draw this little zone out. You can bring it all the way here in the past. And what I noticed about the zone, this was our first touch of it. And you can see we had a nice little wick coming off of it, and price ended up rejecting. Okay. Let's go ahead and see how many pips. That was over a 200 pip rejection off of the zone. Price decides to come down again right here. Rejects off the zone and then still rejects. And it finally builds up enough momentum to break out. And then we decide to get the pullback of market structure. And then we get rejection. So at that point, I realized that this was a crucial level of market structure. And that price could potentially be showing reaction anytime it may, come to touch it. Okay, and you could probably draw like a little trend line here as well, because once again, trend lines, price doesn't necessarily have to touch a trend line. This is a moving zone. Okay, this is an ascending or a descending zone that price likes to respect. So of course we get the breakout and the pullback, and then we get more rejection off of the area, and that signifies that to me this level was pretty strong. And being that price decided to approach it again, for my trade, I knew it would be a good time to actually look to enter. Okay, so let's go ahead and take this off the chart and look over here. Okay, guys, price is approaching again, and we're looking at the daily time frame. So obviously, it doesn't seem like too much has happened, but when you have your entries down, you can definitely get in and out of markets around these areas. So price ended up rejecting almost 98 pips already. Okay, just about 90 or so pips. And yeah, guys, overall was a pretty nice trade. Step one was just identifying the zone on a higher time frame. Okay, our zone is here, support resistance in confluence with the fact that we're on a 50 moving average. Okay, next thing we're doing, we're going to the lower time frame. Step two is obviously the lower time frame. Okay, now we want to identify a crucial level on this lower time frame. We're going to want to draw out our support resistance and supply demand zones where price tends to come with the most reaction, because like I said, we're looking for the most efficient trades. We're looking to get in and out of markets in the most efficient manner. So next thing I do is I go on this lower time frame and I look for potential zones where I can enter and catch reaction to. Okay, so these are probably the main two zones. This is what price is trading in overall. And what I noticed is we got the strong upward movement. Okay, we got the strong upward movement. You could probably draw like a trend line, make it like a little ascending zone here. Okay, and what I noticed that price was moving up, and it's, you know, it's pushing up and it's making deep pullbacks. However, it approaches our zone. It approaches a higher time frame zone that I just drew out, and it rejects very, very strongly. So it's not like it had minor rejection and then it made a breakout and it pulled back and ended up going up more. No, it ended up rejecting for about 90 pips. And this is when market movement began to slow down. It actually began to consolidate. So what I was doing here, being that market began to consolidate, it began to slow down. It was also approaching our value zone. My bias to this was sells. So I wanted to see an opportunity, which led me to look to sell this market. Okay, so for me, it looked like my best bet. We had one touch of this zone, two touches of the zone, more touches after this big bullish spike, and then we get this next touch. And this next touch is where I decided to enter. So I wanted to gain more confirmation. I wanted to see what would actually trigger me into this trade. So let me take my moving averages on the chart, since we don't no longer need those right now, and I identify my reversal formation. Okay, one thing you can do, I noticed price touched it. I seen the wicks. You can look at all these wicks signifying rejection off of the level. Candlesticks do not lie. When you're looking at the candlesticks are giving you a direct representation of what's actually going on in the markets. People ask me what tip I have for them for new traders. One of the main tips: look at your candlesticks more, man. Look at your candlesticks more. Okay, so you can draw this little trend line, however you wanted to draw it here, something like that. I seen the break of the trend line. That's something else that's signifying to me that more bearish pressure is coming, because think about it. If we had bullish pressure, we would potentially see rejection, you know, consolidation up here and then a breakout. But when I see this little ascending zone, however you want to draw it, you could probably draw it this way too. But when you see this ascending zone, you see the breakout, that's signifying to me that potentially the buyers couldn't hold into these markets, and it looked like sellers were beginning to gain control. So step 3, obviously, look for a sign of, you know, my sell bias coming into place. So obviously this breakout trade was my bias. Now step 4, I'm looking for my pullback. Okay, pullback is a conservative entry. A lot of people like to enter on this breakout. Me personally, I'm looking for the pullback. So I'm going to take my Fibonacci from the top to the bottom, swing high to swing low. Okay, and I'm going to draw this zone out, 786 through the 618. This is where I like to enter for some of my trades. Okay, 786 through 618 zone. This is going to be my sniper entry zone. Okay, so I'm going to enter this on the 618 level. Stop loss is going to be a little bit around these structural highs. And then I'm going to go ahead and put my take profit down at the 618. Now, one thing you never want to do is put your take profit down at a certain level without identifying the structure. Okay, let's look right here. Our 618 level is going to be this level of market structure. So I'm potentially looking to take price from up here on the 618 through 786 zone all the way down to the bottom, which is this nice little level of market structure. So before you look to take price down to a level, you always want to ask yourself, does this make sense for me to look to sell down to this level? And in this case, it did. A couple things had to happen before price actually came down this level. We had to see the breakout of this trend line, which in my case it broke out, and I noticed that that was going to be a quick play out with the way that this market actually reacted. Okay, so we entered on a 618 entry, exit on the negative 618. Now I want you guys to just look at this and examine the entry of this trade and examine the exit of this trade. You look at our entry. This entry was less than a pip in profit. I'm sorry, less than a pip in a drawdown. We went less than a pip into the negatives on this, and the zone of us actually getting out of this trade without take profit was amazing. It literally wicked our take profit. So when you understand how to enter the markets, with low drawdown, and you know how to exit the markets with the best possible, exit out of your trading goes to another level. I don't care what anybody thinks that says you shouldn't focus on entries or you should focus on exit. When you're a day trader and a scalper, it is crucial to get the right entries, because I want you guys to think about it. If you're not getting the right entries and you start sitting in huge drawdowns, a lot of emotional traders, their emotions are going to come into play. So that may scare them out of a trade. That may cause them to stack more. That may cause them to put more risk on their positions. You know what I mean? So for me, having a good entry and a good exit is crucial. It keeps my trading clean. It keeps my trading simple. It keeps my trading effective. So that's another tip. If you're a scalper, focus on the entry more, because when you got a good entry, I tell you what, when you got a good entry, you don't got to worry about that emotional drawdown and worrying about being in the negatives. So yeah, I'd say focus on entries. However, if you're like a scalper, I'm sorry, not a scalper. If you're like a swing trader and you're holding your trades, for days on end, and yeah, you're not going to want to focus on entries. You just want to focus on getting that trade to play out in your direction. So yeah, overall, downward movement went really well. If we look at the zone I was looking to take price to, it was actually following through with the bottom of our channel. As you can see, prices moving in the ascending channel here. It ended up touching the bottom of it perfectly. It's showing pretty strong rejection. So in order for me to clarify that this market is going to continue to sell off, I'm going to go back to the daily for a second. We can see this small upward movement. Okay. Obviously, price approaching our value zone. We can draw out the support resistance level, which made it a bias for me to sell. Then had this ascending channel and just wanted to catch at a certain level of market reaction. But okay, I see the touches of this ascending zone. I see how price reacts. So now what I'm looking at, we get another touch of this. If we see more rejection and we see like a break of highs, then that's signifying that there's going to be bullish pressure. If I see a breakout to the downside, I'm going to look for a pullback, and I'm going to look to enter on that pullback, and it seems that pullback will probably play out with a little descending trend line. Okay, guys, so people ask me all the time, do I trade with the trend? Do I not trade with the trend? Here's the way I'm going to answer that. I don't specifically buy when price is trending up. I don't specifically sell when it's trending down. Okay, I identify market structure, and I see how I can catch the highest reaction and the highest probability trades through catching this very strong reaction of market structure. It's as simple as that. When I see price approaching a level where it's reacted extremely, strong in the past, I wait for it to happen again, and I enter with my right trading rules and enter with the best entries possible while respecting risk to reward. I enter in that style of trading, and that's how I get in and out of my trades. There's no secret to this. It takes time. It takes practice. As long as you're putting in the work, as long as you're back testing and putting in the time, then you can get the results. You just have to be willing to take that next step. Okay? You have to be willing to get that next step. You have to be willing to put in the time, learn new things, and change the way you think about trading. If what you've been trading hasn't been working for the longest, then I think it's time to take a different approach to things. Me personally, I take a different approach than most other traders. I've seen times where a few people I know were screaming, buy GJ, buy GBPJPY, buy it right now. And I dropped 12 lots on that thing. And I sell against it. And you guys have seen it. I posted on my Instagram. I dropped 12 lots on high impact news where everybody was buying. But I knew because I seen my edge. Another thing, you should only be entering the markets when you see an edge. If you don't see an edge in the markets, you should not be fucking entering. That's the way it goes. You shouldn't be entering. Wait for the market to show you your edge. You enter like a sniper, and you go. I want you guys to ask yourself one thing. Last time you lost a trade, the last time you blew an account, what did you do wrong? You probably went against your rules. I don't see too many people that follow their consistent rules, that minimize their risk, end up blowing accounts. Those are the only people that end up blowing accounts. You know, when I see people that are risking too much, trying to flip accounts, they blow accounts. But when I see people that are profitably doing it and risking a low amount, following their system, following their trades, having the patience to do things, those are the ones that's trading are gonna go to the next level. It may take a little more time, it may be a little more long term, but that's how you gotta look at this. You gotta look at trading for the long term. But without further ado, guys, I'm gonna go ahead and wrap this video up. Go ahead and close this analysis out. I'll catch y'all in a bit. It's me, your boy BGFX. I'm out. Peace.